Good evening, everyone. Thanks so much for joining tonight's Corporate Connect webinar. My name is Gerald, and I'm very pleased to be your host for tonight. So tonight we have LMS Compliance, and we also have the audience from Mumu Live. This webinar is organized by SIAS and supported by the SGX Group. So if you're not familiar with LMS Compliance, it is a Malaysian testing and certification provider with more than 15 years of experience. With 3 accredited labs, LMS offers a wide range of tests. The company also provides audit and management system certification services, and this will help to ensure compliance with industry standards. So what we'll do is we'll kick off tonight's webinar with market highlights by SGX representative, and thereafter we will have a corporate presentation by the CEO of LMS Compliance. So without further ado, I'll invite Ms. Emelia Tan, who is Director of Research and FinLit at SGX, to be sharing some market updates with us.
Good evening, everybody. Let me just quickly... All right, I think we can begin. I'll just give a very brief update in terms of the market in the year to date so far. I'll keep this very short, just 5 slides, 5 key points that you need to know about. Okay, this is a standard disclaimer. Do note that today's sort of presentation is more for investor education. Past performance does not indicate future performance. Okay, so now we looked at the STI benchmark, right? And since end of 2019 until now, that's about close to 4+ years. STI has generated competitive returns from end of 2019 until end of the March quarter. We saw STI perform about 18% in terms of total returns. This is more or less kept pace with the regional APAC as well as Asia Japan indices. Now, at the same time, STI has also outperformed the ASEAN benchmark, as you can see over here. This is even though Singapore stocks actually make up about 40% of the FTSE ASEAN Extended 60 index. And within this index alone, our 3 local banks make up about 22% of this index. Now, that being said, the STI does maintain some element of independence versus some of the other global benchmarks with not much of no significant daily correlations to different host of relevant benchmarks. And at the bottom, as you can see, over the past 4 years, right, retail investors have been net buyers of Singapore stocks. They've been net buying with a net retail inflow of close to about 15 billion. And the numbers that we've seen so far have actually shown that retail has been a bit more active buyers, especially when the STI underperforms its peers as opposed to the opposite. Maybe this is retail investors also taking the opportunity to rebalance and also revisit their portfolios. When we look at this year, 2024, no surprises, right? Tighter financial conditions, China's strategic economic policy, and also some of the reform agenda are 2 overarching market drivers that have carried into 2024. And these fluid developments, right, have also kept investors on their toes. Not just that, geopolitical concerns are also a big driver in 2024. This year, we're seeing over 70 countries going to the polling stations, maybe even us as well, right? So this year is definitely the year of elections, and all eyes are on this and how this will potentially shape the world as well as the stock markets. And this is perhaps also why gold at the bottom right of this slide, typically gold is seen as a safe haven asset, has also been outperforming, which in fact has doubled STI's performance so far. In this slide, right, what we've done is that we've taken a look at all our key sectors across the different quarters. What you can see here in green means that it has outperformed or recorded gains. In red, it's sectors that have recorded declines for that particular sector. The point of this slide, what I wanted to show everybody is that beyond the benchmark, beyond STI's 30 stocks, Singapore market has actually over 620+ companies. And for every 10 stocks that saw net institutional selling activities this year, actually 9 have been net bought by institutional investors also. And for every 2 stocks that saw a decline in the first quarter of this year, 1 stock actually recorded. So for every 2 stocks that declined, 1 stock actually recorded gains. And this year, first quarter 2024, banks actually recorded close to about 5% gains. Telcos were the next most defensive sector, averaging about 3.5% gains. And this is versus the S-REIT index, which has declined about 7% in terms of total returns. Now, travel and hospitality stocks, right, like your Singapore Airlines, Genting Singapore, ComfortDelGro, they've declined about 4.6%, giving back close to half of what they actually gained in the last quarter for last quarter 2023 that we see on this chart over here. And travel and hospitality as a sector, yes, during COVID period, right, where travel was limited, these sectors and these stocks have actually underperformed. But then there was recovery, and you can see that these sectors have actually outperformed what I've highlighted on the top right of this slide. They've outperformed in the last quarter of 2022 all the way up to the end of last year. So 2023 perhaps was what we saw in terms of the year of inflection points, right? Combining the strongest sector of every quarter that has generated 26% in terms of total returns, whereas on the opposite side, all the laggard sectors of the month, if you sum it up, it has actually declined 9%. In the next slide, I will talk a little bit about Singapore banks. Okay, Singapore banks, as you know, make up more than half of the STI in terms of the weightage, close to about 55%. And for banks, the outlook for 2024 this year really hinges on rate cuts, right? What the Fed has talked about, signaling 3 rate cuts this year. The banks, our 3 local banks, since the end of 2019 until now, they've actually averaged 50% in terms of total return, so not bad. And the 3 banks, when we look at the 10-year annualized total returns, it actually was 10% at the end of March. So also not bad returns, right, on a longer term basis. And also in terms of the distribution or a dividend yield front, the FY23 distribution amounts for our 3 banks actually averaged at about 6% in terms of dividend yield for our 3 local banks. So what we're seeing over here on these 2 charts, right? At the bottom chart, for example, if you look at the dark blue bars, if you sum up all the dark blue bars, this actually is the combined total income of the 3 banks. It has increased this year to 48 billion in total, definitely driven by higher interest rates, because as net interest income is driven by net interest margins, loan growth, these are in turn driven by interest rates. And the 3 banks have also recorded improved ROE over the past few years. The average ROE of the 3 banks at the moment is in fact higher than 15%. Now the chart at the top right hand corner, this is actually the combined net interest income for the 3 banks on a quarter-to-quarter basis. What you can see, right, at the top right-hand corner, which is, that the combined net interest income for the 3 banks in 4th quarter FY 2023 has exceeded 8 billion. In fact, the number was 8.3 billion. And if you can see the bar chart, right, this is the 5th consecutive quarter that we saw net interest income above the $8 billion mark. Now, before 2022, which is before Fed actually started to increase the rates, net interest margin typically hovers around the 4 to 5 billion mark, and then it slowly increased to about the $6 billion mark in sometime mid-2022. Then it went to 7 billion, and now it has actually surpassed the $8 billion mark. And you can see that with the increases in net interest income, that actually correlates with the increase on the compounded 3-month SORA rate, which has also coincided with the Fed funds rate hikes between March 2022 until July 2023. And when we take a look at what some of the analysts are expecting in terms of the potential next rate cut, right, is that when we look at the CME FedWatch tool, currently investors or traders are expecting perhaps a June or a July potentially to be the first rate cut for 2024. Right, and that is a little bit different from what the March forecast was at the end of 2023. I think at that time, investors or the market was expecting the first rate cut to be as soon as March, but this time around it sort of pushed back to June or July. Now, going into this year, 2024, some of the banks, when we look at what the CEOs have actually said, right? For example, DBS, they noted that perhaps higher for longer rates do support net interest margin, but there is a likely trade-off with loan growth, and the bank expects for 2024 net interest incomes to be close to around their 2023 levels. For OCBC, right, Helen Wong noted that the bank was targeting an ROE of between 13 and 14% in FY24. And they expect actually the Asia business to perform better. For UOB, Mr. Wee actually noted that they are quite optimistic about ASEAN's growth potential because we're talking about ASEAN, right? It's the tourism recovery story, improved domestic demand, and some of the strong investment flows into the manufacturing sector, which could potentially be some of the key drivers for them. Now, this slide, slide number 4, right? Interest rates, not just only impact banks, but they also impact another sector, which is REITs, which is what I want to talk about in this slide. Now, for REITs, it's more of a did you know, right? As REITs today, there are about 40 as REITs. The combined market cap is about 100 billion. That makes up about 12% of Singapore's combined market cap when you compare to our 600 plus stocks. But in terms of a daily turnover, it makes up about close to a quarter of the daily churn that investors are trading into our stock market. And REITs, we have 40 REITs, but our REITs are actually very diversified, as you can see on the pie chart. They're diversified in terms of where they invest in, what type of properties they also invest in. For example, in Singapore, we've got 16 of the trusts in this bottom pie chart over here that invest exclusively in property assets outside of Singapore. Whereas we have another 27 REITs that actually invest in properties across Singapore as well as outside of Singapore. And we've only got 3 REITs that invest purely in Singapore. So it's a very geographical, diverse mix with different property subsegments, allowing REIT managers to then diversify risks across different industries, different customers, and also different currencies, right? So what are we seeing for our REIT sector so far? From the end of 2019 until the end of March this year, we noted that yes, the IHS REIT index has actually declined 9%, while the FTSE EPRA REIT Developed Index has declined 3% comparatively, right? And for our REIT sector, the average dividend yield is around 6 to 7%. And the average gearing ratio is also at about 39%. What this means also is that the average ICR, which is the interest coverage ratio, is about 3 to 4 times. And it's a regulatory requirement that it's got to be above 2.5 times for an individual REIT to actually have closer to the 50% gearing ceiling. Otherwise, typically your gearing ratio is limited to 45%. So our REITs, on average, the ICR is still well above the regulatory limit of 2.5, given that the average ICR now is at 3.9%. When we look at our REITs, right, we look at it from a price to book valuation standpoint, and we noted that actually our REITs, they are currently trading at a book value of close to 20% discount to their 5-year average book value. And the median price to book of our S-REIT sector is at about 0.7 times. We have actually 4 REITs that are trading above book value, just above 1.0 times, right? And the 4 of them are actually CapitaLand Ascendas REIT, Mapletree Industrial Trust, Keppel DC REIT, and also Parkway Life REIT. But what's interesting, even though these REITs are trading above book value today, they're actually trading below their 5-year historical average. Okay, and so we're seeing some of the sectors having a bit of updates so far. For instance, Fraser Centrepoint Trust, just last month, they've been added to the STI index. FCT, interesting one, looking at their longer term returns, more of a did you know, but since 2006 until now, this REIT has actually averaged 10% in terms of average annualized total returns so far. In terms of distribution per unit, when investors look at REITs, they always look at DPU, right? What's interesting to note is that we noted that hospitality trusts have actually started to record improvements in terms of their DPU. For example, our 5 hospitality trusts actually averaged more than 21% in terms of a year-on-year growth, perhaps also riding on the wave of this whole tourism recovery, right? And in terms of acquisition plans, some of our REITs have started to announce some of these acquisition plans and are also starting to become a little bit more active with the secondary fundraising activity. Last slide, promise you, I wanted to highlight 10 stocks which are most traded this month so far and have actually booked double-digit returns. So for the month of April until last Friday, right, STI has actually generated about a 1.5% decline. But despite the decline, we had 200 Singapore stocks which registered gains so far in the quarter to date. And in fact, 80 of them had registered double-digit gains. So while I'm not able to show you the full list of the 80, here are the 10 most actively traded ones that have returned double-digit gains in the month to date so far. One stock that I wanted to highlight, Jardine Cycle and Carriage, which is the top traded so far in the month to date, has gained 10%. This stock has actually declined 20% from the end of 2023 up till 12th of March before it actually recovered 11% from 12th of March until 19th of April. And we also noted that institutional investors have started to net buy this particular stock, recording 40 million in terms of net institutional inflows into the stock in the past 5 weeks. This stock has recently been initiated by Citi recently. They've got a target price of about $29, citing the company's strategic investments in ASEAN, especially in Vietnam. And of course, Jardine Cycle and Carriage actually is also the investment arm of the parent group, Jardine Matheson Group in Southeast Asia. They've also got a couple of interests, for example, in Astra, which is an Indonesian automotive conglomerate in Indonesia. They've also got a notable share in Vietnam's TACO and REE. They've also got about a 25% stake in Siam City Cement, as well as a strategic investment in Vinamilk. Now with that, for more updates, do follow our SGX Invest Telegram channel, and I look forward to sharing more updates with you guys. Thank you.
Thank you, Emelia, for the update. Very informative as always. So next we have got the management of LMS Compliance, who will be able to give us a presentation on the company. So without further ado, I will invite Dr. Louis Wee, who is the CEO of LMS Compliance, to actually share with us more about the company.
Thank you. Good evening, everyone. Thank you. First of all, thank you, SIA, that invite LMS to give this opportunity to showcase our company past 1 year. Next, please. Yeah, I'm going to cover 4 sectors. First of all, to ask, who are we? Yeah, we are an independent testing, certification, and assurance service provider, and accredited by Standard Malaysia and accountability. Accredited by Standard Malaysia and also accountability. This is independent and also AB accredited body that actually assured our service at the is actually recognized by international customer. Next, please. A quick glance. We have founded in 2006, and currently we have a footprint of 41 countries based on community assessment technologies, and we have active client of 13,700. Online user for community assessment technologies about 24,000, and we can run more than 1,100 accredited tests. When I use the terminology of accredited, mean the testing is internationally recognized, and there won't be any dispute when we release the result to other country or other exporting country or importing country. Currently, we have complete assessment. We have been carried out more than 1 million of conformity assessment activities in 2006. Next, please. A lot of people ask me what is actually mean by LMS compliant. It's not mean people just large, medium, small. So giving me an opportunity today just highlight to you company LMS is actually is an acronym of technology called linear multiple surveillance. And the words of LMS also having an acronym, digital acronym that strive for accuracy, agility, simplicity, security, and sustainability. Compliant referring to our core businesses related to testing, assessment, certification, and assurance. So this called ourselves LMS compliant. Here is CopTech. Take a look at the 2 minutes videos. Yeah, thanks for watching. Next it. Yeah, what do? We certify product safety and quality to meet the international standard for bilateral trade that could reduce technical barrier of trade. It simply means that whenever there is a import or export between two countries and require third-party certification, verification, and even though testing, we are there to help. So this particular trade are quite robust and it has been exist in the world for more than 300 years ago. Yeah, next please. Our competitors, again, whom do we compete? Basically, are those from Europe, HGS, Eurofin, Intertex, Bureau Veritas, TUV, and many, many more. We are the only one, we are the first accredited lab listed in ASEAN's stock exchange. Yeah, next please. Now and moving forward, we provide limited assurance for organization greenhouse gas inventory, validates emission reduction project, verified sustainable report, assess carbon life cycle, and determine product carbon footprint to support carbon pricing ecosystems. So in H2 for this year's, we're going to add another accreditation from Singapore Accrediting Council as well. Next, please. That is a wide range of the services related to ISO that actually mentioned earlier, which actually lean toward the assurance services that we launched in this year's. Next, please. This is our 5 business segment. Testing assessment consists of 95% of revenue. The remaining is certification, trading. Confirmation technologies is our sole proprietary that actually selling our own digital platform and apps to support our conformity assessment technologies. Lastly, is actually newly launched services on assurance and verification and validation. Next, please. We call ourselves EIG enabler because it has been carried out environmental related testing or sampling since 2006. Here is our related to environment testing like chimney monitoring, air monitoring, wastewater quality analysis, boundary noise, EIA, and many, many more. On top of that, we provide also social enable on product safety, microbiology content, and DNA content. This is all related to food safety. For those items that export to EU, non-food basis, we have REACH and Rewatch compliant and others palm oil and testing for WE. This is another aspect of social compliance as well. Next, please. Yeah, we also provide workplace safety assessment based on hearing tests and also the noise exposure, personal exposure monitoring, so to ensure that our employee working in safe condition. Yeah, next please. Thought that we also provide certificate services that align with the testing division. For example, the certification on 14001, which we call it EMS, Environmental Management System, that is actually related to environments and level. Social and level, we have 45,000, which is safety, OSHA, food safety, as I mentioned, and others carbon related and levels such as ISO 26000, 37,001 for anti-bribery, information security, information management system, 27001, and many and other social assessment and also audit will be provided under the license of others CV. This is all related to governance enable. Yep. So with this is EIG. For trading, next please. We are now focused on distributing these conformity assessment technologies, which is our sole proprietary developed apps, which is ANKIT, is a laboratory information management system that actually we want to license this particular laboratory management system to others laboratory in the regions. And we also have document management system. Now we convert IZEN to be carbon accounting platform that actually to facilitate our training and also licensing purposes. ISIN is global real-time surveillance, which is a distortion. This is actually a disruption technology on current product certification because it's real-time surveillance. So this is our conformity assessment technology available for market right now. Next one. Industry footprint, we cover quite a whole spread of the industry, start from food, feed, fertilizer, pharmaceutical, medical device, healthcare, industrial, and green technology related industry. Currently, we have 3 state-of-art accredited laboratory in Malaysia, and then 2 licensed third-party laboratory in using our IKIN LMS, and we have 1 sales office in Kota Baru. Next, please. Key milestone, I'm not going to cover all, but would like to highlight. We started our LIM systems in 2007. Next. We are the first laboratory in 2008. 2018 to launch QR code scanning to reduce misappropriations of testing certificate. Next. In 2023, December, we launched our very first carbon footprint certificate on analysis. We indeed put out all the emission numbers as per numbers of tests that we carry out in the during the testing. Hence, all the carbon footprint are different, are unique, based on number of tests that we generated during the performance of carbon assessment technologies. Next, please. Financial highlights. Good to know. We are actually having around 9.8% CAGR growth in terms of revenue based on Ringgit Malaysia. And in compared to H2, in H2 quarter, second half of 2022 and 2023, we actually grow at 11%. Basically, traditionally, our H2 are stronger than H1 due to seasonal impact. Breakdown into segment, our non-testing are growing the segment compared to the testing assessment considered 95.8%. Next. Financial highlight in terms of profitably EBITDA in terms of Ringgit Malaysians, we are going at 8.9. We achieved at 8.9 million in 2023 compared to 8.1 in 2022. This estimate mean because of one-off listing cost. So if you add back, it's about 8.1, but they grow additional of 800,000 compared to 2022. EBITDA margin is quite stable compared to second half 2023 to 2024. We're maintaining at 41.5%, relatively quite stable. Net profit we grow at the 5.5 million in 2023 and compared to 5.1 million in 2022. If we add back the one-off listing fee, we are going at a very steady basis. Net profit margin compared to H1 second half 22 and 23, we are growing at about 1.0%. But in total, we are contracted about almost 0.9% due to the our area of investment on the certain project, and thus we are especially spending a little bit of venturing into assurance businesses. Yeah, next please. This is a quick of financial ratio revenue. We are going at from 18.9 million in 2022 to 2023 and 20.9 million. Our adjusted earning per share is 6.27 cents compared to 5.8 cents. Net cash growing from 9.3 million to 14.5 million. And dividend per share aggregate to 1.32, including special dividend of 0.97, translated to around 3% of dividend yield. Yeah. Return of equity wise, we are quite stable, 19 to 18% comparison to 22 year, and same thing go to our debt to equity, 35.6%. Yeah. Next, please. Yeah, business strategies for future growth will be focused on 4 segments. First thing, next please. Yeah, we are still focusing on the we believe in digitalizations. Indeed, last year we digitalized entire entire laboratory operation. We are no longer using paper. We're using apps to key in all the data. This the end result of having introduced this particular new modules significantly reduce unavoidable data transfer error. So it's increased the productivity. At the same time, we also increase the customer satisfactions. We compare to others laboratory, we are a bit different. We spend a lot of money on digitalizations effort. Next, please. Yeah, we are growing to other region. We are talking to others collaborator in the regions of ASEAN and also Asia Pacific. There will be some MA activity for probably this year. So stay tuned. We will make announcement from time to time. Yeah, next please. Corporate governance is one of the key focus for the particular company. We believe independent of directors and diversity of directors that could actually bring positive value for a company. The name of the company, as I mentioned to you earlier, compliance. So compliance is one of the key elements we believe to grow the company in the steady way. So our board independent is about 71.1%. 0.4%. Board diversity in terms of ethnicity is about 57.1%. Total women director is about 42.9% on boards. Next, please. Business growth and future plan. We believe the next growth engine will be focused on sustainability. Indeed, we launched these particular assurance and verification services. We spent about a year, especially as I mentioned to you, the margin impacted a little bit on spending R&D, spending some marketing, spending a lot of time to create that particular new services. Hence, this year, beginning of this year, we already started to monetize from the particular assurance business segment. For this particular area, we are covering sustainability reporting based on TCFD. SASB, now we call ISSB S1 and S2. GRI is one of the most reporting overarching standard that a lot of people adopt. On top of that, we also conduct greenhouse gas as per ISO 14064-1 training and also workshop to transform, to assist our client, which is under pressure of C1 compliant or under pressure of compliant to supply chain requirement to help them to fulfill greenhouse gas requirement. So next, please. This is our board member. First thing, our chair lady was immediate Director General, retired Director General from Standard Malaysia, and our chairman for NC is actually Tan Sri Gui. He's actually independent director for Security Commission in Malaysia. Chairman for RC is actually Ms. Wong, is solicitor and also profile lawyer in Penang. And for AC chair is actually Mr. Ong, Richard. He's actually quite handling the AC for the operation, AC compliant. Professor Chong is actually our non-executive and non-independent directors from NUS. He's focused more on the AC as one of member. As you can see, we have two ED, myself and Ms. Chong. We did not, join as a member or for as a member of any NCAC or RC committee. So we believe independent will drive the company eventually. Next, please. Hey, thank you.
Thank you, Dr. Wee, for the sharing. So with that, we'll open up the Q&A for participants today to be able to ask us questions. For those of you who have joined us via Zoom, you can put in your questions in the Q&A section of the platform. If you are from Mumu, do join us on Zoom to be posing your questions, and we'll definitely try to answer as many questions as possible today. Okay, so while we are waiting for some of the questions to come in, we already have some pre-submitted questions from investors. I think some investors want to get a better understanding of your company. You shared some of the milestones earlier. Maybe you can share with us, how did the company come about? What were the initial founding years like?
Sorry, can I have your question again?
How did LMS compliance come about?
In terms of journey?
Journey, yes.
Okay. LMS was started in 2006, indeed, for 5 people, about five employees together, the ED, me and also Miss May. During the time, we only accredited around, I still remember, about 7 testers, accredited 7 testers. We start at 7 testers and then grow until today. We can run more than 1,100 accredited tests. The reason why the company grows so steady, indeed, there is 2 factors. Factor number 1 is testing services is actually is a quite important services that a country required, because whenever there is the export, you need someone to verify the content of the product. Whenever you import for material, you also need a third party to verify the content in terms of toxicity, in terms of micro content of the particular thing. So that whenever country economic growth, steady growth, testing become one of the very important services that can ensure the quality of the product. Hence, you look at the regional ASEAN Pacific growth rate, right? The GDP are quite sustained, and there's a reason translate into we have opportunity to grow beyond, from the region to become a national level. When I use national, mean Malaysia context. Now we try to get the listed and then become international or regional ASEAN, more than ASEAN's APAC Pacific level 3. And this is one factor. The other factor is actually we quick on diversify related using adopt related diversifying tech methodologies. We spin off from testing to certification. That is why the reason we spin off to certification, because we run a lot of compliant testing in terms of various ISO systems, like 2000 food safety, 45,000 workshop. These are workforce safety that assessment. So to many extent, we understand what the industry want. So to pivot from testing to certification, we will be actually tapping the same customer, but from the other compliant requirement. Lastly, we end up last year making a very significant move. We position ourselves as ESG enabled, where we provide as data collection. Hence, we believe that with all these technical scientific data, we should be in a better position compared to other competitors to provide ESG reporting and also greenhouse gas accounting services. Yeah, that is a short one.
So relating to that, you shared the different segments that are growing within the company. So if I were to break it down across the different segments that you're exposed to, is there one area that has actually been growing faster compared to the others?
I think right now in the sustainability landscape, I think it's quite sexy. Yeah, a potential growth for the our company or our group. This is because of the climate change. Last month we can experience very warming situation in ASEAN, especially Singapore and Malaysia. On the other side, like in Europe, I think they are facing some during spring. There is a snowing in that area, because I was in Europe for last 2 weeks. And then on the other hand, Dubai, transit in Dubai. Luckily, I was not hit by the floods. Now the flood situation are so drastic. So this climate change has been coming fast, and due to human activity. So sustainability is important to focus on planet, people, and also prosperity or so-called profitability. Company that prosperous, company that making profit should take care environment and people aspect as well, because this is a very important situation where we cannot continue exploit resources but never give back or stabilize back the nature. Hence, I think sustainability is actually a very important aspect for company to grow, especially in Singapore. Yeah, we will be having a footprint in Singapore to provide such services as well, because with all these Singapore roadmap to be net zero in 2050. So we would like to grab the opportunity as well.
Okay, so relating to that is a question from our live participant, Chi Bin. The question is, given that now you have about 95% of your revenue from testing and assessment, how do you foresee the revenue mix changing in the next 2 to 3 years? And given the focus on climate change, do you see more investment to grow the assurance business?
We are looking at least certification will expand to our around probably one quarters of the 1/4 of our revenue in the next 2-3 years. 2-3 years certification. On top of the certification, on top of that, we're looking at the drastic growth on the assurance. However, assurance may not be a requirement right now, especially I'm talking about external assurance provider, because a lot of exchange are still accepting internal assurance. But looking at another year or two, external assurance will be hot selling services, because I personally I can see unintentionally so-called greenwashing has been actually tagged along with the promotion and marketing activities. And I use the term greenwashing is actually those greenhouse gas emissions or carbon footprint without verification by third parties has been spreading around this year. Especially if you Google around, you can see a lot of big name, multiple multi-billions company are also facing the same problem. So assurance are one of the very important area for growth right now. Perhaps external assurance are now looking at the limited assurance, which is more boardroom assessment or verification that can be carried out by scientists or no scientists. However, when we pivot from requirement from limited to reasonable assurance, right? There will be a lot of requirement or necessary that the live data, real-time data, on-site data to be drawn in order to make a prudent decision on to grant the reasonable assurance. It will be more confident. There will be more job to do, and I guess being a level 3 that running 16 years, more than 16 years, data for environments, you have a very bright future, to provide higher sophisticated assurance in a perspective of reasonableness. So that is what I see from the picture right now.
Okay. Earlier you shared some of the competitors in the market. Can you maybe share with us how does LMS Compliance differentiate itself from some of these competitors?
In terms of testing or in terms of which perspective?
I guess testing, because that is your key business segment at this point in time.
We quite different as compared to let me bring everyone to Malaysia context or even in Singapore context. Has been moving around this region before listing to look for collaborator. I can see the observation shows that they are either still in manual mode to comply to ISO 17025 testing requirement. Very little of them they are in spend a lot of money in digitalization. Perhaps one or two invested and still develop their own slim system. We are different Yeah, compared to those local potential or regional local-based laboratory, we are digitalize a lot of our operation. I would say in our laboratory management system or laboratory testing operation has been more than 99% has been digitalized. Never use paper already. It's reduced emission long way ago. If you still remember the slide that we show our certificate of analysis, having a carbon footprint there is a big work to do. If you are not digitalized, you cannot calculate the carbon footprint automatically. Hence, thanks for the digitalization. Decision has been made probably 15, 16 years ago when we first started the journey of to be a testing laboratory in Malaysia. I think I made the right decision to launch our first LMS system coded by me during the old day. But this transformed into a competitive edge where we outbid lots of competitors locally and internationally. We stress on 5 areas. Yeah, we believe clients are looking forward service provider that can attain accuracy, agility, security of services, simplicity of making business, and lastly, we're talking about sustainability right now. With all these 5 pillars, we make our stand to listed in Singapore Stock Exchange. Yeah.
Hey, there's this question from Zen, who's also a live participant for tonight. What are some of the risks that a testing and assessment company will face, and how is LMS addressing this risk?
When we are providing international, recognized testing report, I think accuracy, is very important, issues. Yeah, in terms of accuracy, for example, if a company issued a false positive result and end up is due to error of technical error, so it will happen because laboratory are largely depend on quite labor intensive to some extent. Indeed, our strategy to reduce or minimize this happen is to digitalize it. Yeah, we did an example in the slide that I showed just now. We digitalize entire workflow, especially in laboratory operations. Instead of using paper, because like it or not, 17025 these testings environments, they require lots of paper to record to ensure that accuracy and traceability. When the paper transfer from one to another, used to happen is actually transfer data problem, transfer data error. So this error can be linked to human aspect, can be linked to calculation aspect, can be also, from one paper to another paper, one machine to another machine, injecting the new data into the system from one to one, and the system are not talking to each other. There is a tendency of having human mistake or human error during that time. By doing this digitalization and aborting all the paper, calculation manual, indeed it cut off a lot of potential due to data transfer error into here. So this is one aspect. The other aspect is on calibration and proficiency tests. So as a laboratory that provide independent services, we are spending a lot of money also, to do international proficiency study and also to do in-house quality check from time to time, especially intermediate check, beginning of the testing check, compare the result to gold standard or recorded reference standard. And also we do a lot of the participate a lot of the inter-laboratory comparison. This will be actually bring down and increase the competency of carry out testing compared to our peer. Hence, in testing, we never compete to our peer. Indeed, we make our peer as a companions. So because we can actually co-run testing in order to make sure that the result of this particular testing facility are all the same. So this is how we mitigate in terms of for ISO perspective, they are stressed on inter-laboratory comparison, proficiency testing, increase the competency of the chemists or scientists. However, on top of this, that additional requirement, or dimension, digitalization can cut down numberless of mistakes. And the study shows that accuracy indeed are due to human, not because of the result are not accurate, because of the transfer of data and all these things.
Okay, relating to the question on risk, earlier you shared that your margins have stayed relatively stable over the years. What are some of the factors that can potentially affect your margins or bring it down?
Margin to many extent are impacted on the our raw material, due to the softening of ringgit. However, it compensate or it offset by digitalization. Digitalization. Just like example, same example again. The modules that we are introduced in the laboratory, cut down paper, cut down writing. Indeed, that particular month, we can see constantly reduce, I think, 4 headcount. In technical headcount, we reduce 2. Administration headcount, we can also unlock another 2 more headcount. With all this unlock, right, we can actually re-report them to do others area that could bring more value to the company. Example, in our history, we never disband people due to digitalization impact. Indeed, we assign them to do cold calling, can follow up the additional, client inquiry. So the more you follow up, the first that you follow up, and the more you follow up, the winning factor are always there for you. Hence, offsetting by technology deployment and also digitalization has, to some extent, cushioned the cost increase, cost increment.
Okay, and maybe just as a add-on question, since your IPO, you have actually raised some capital during the IPO period. So what have you been using the funds for, and how have they actually impacted the company's performance?
We only right now we only using the fund for expansion for the our laboratory in Shah Alam and also Johor Bahru. Shah Alam, I just came back from Shah Alam and look at the investment. I guess it's already almost done. It should be flagged to operation 1-2 months from now. Johor Bahru are still in a planning stage. It will be complete in second half of 2024. So with this external expansion of shop floor, we could increase additional capacity from currently to unlock all the area, so that more sample and more personnel can be deployed, and more digitalization also can be launched. Especially, we will launch the second layer, third phase of digitalization that tag along to all the machine learning and also for decision making, things like that. So sensor deployment. So that is an area that we are looking forward. That's a big portions of the fundraising has been allocated for the M&A activity. And as I mentioned to you, there's a couple M&A activity happened in 2024 this year. Some will utilize some funding, which is raised for the proceed. The remaining probably we're looking at the share swap, issuing of a new share to take over or some stake on the company. Here, in short, we still remain quite numberless of money in Singapore after we listed fundraise. Yeah.
Okay, thank you, Louis, for your sharing. I think there are no further questions that I see. So once again, I'd like to thank Dr. Louis for your sharing today. For the participants who are with us, we hope you found the Corporate Connect session informative. And if you've got further questions, do feel free to reach out directly to the company. In case you missed any of today's session, you can rewatch the webinar on SIA's Facebook or YouTube channel. So Corporate Connect is actually our monthly webinar where we provide the ability for you to speak directly to companies that are listed in Singapore. If you'd like to get more updates about some of these upcoming investor education programs, do visit the SIA's website. You can also let us know through the feedback on the chat box to be able to let us know which companies you would like us to feature going forward. The next Corporate Connect webinar will be on the 7th of May, featuring Marco Polo Marine. So once again, thank you all for joining us tonight. Do take care and have a good evening. Thank you.
Bye.